I want to thank everybody for being here today. Welcome to the Global Bitcoin Mining Data Review for Q2 2021. It's July 1st, first day of the quarter. I'm delighted to see everybody. I'd like to just start by giving you an update on what's been going on with the Bitcoin Mining Council over the past few weeks. I'm proud to say that we have run a survey of Bitcoin mining energy consumption, and we have enlisted 23 mining companies into our advisory group. So 23 Bitcoin miners signed up, and they collectively represent about 32% of the Bitcoin mining network. And so that really exceeded our expectations. We didn't expect to get a third of the network, but we've been very, very fortunate. You can see the logos of some of the companies here. And if you're a Bitcoin miner and you're not a member of the Bitcoin Mining Council and you don't see your logo, we welcome you to join. Everybody is welcome. For those of you who don't know, we're a voluntary open forum, and our job is to share best practices and educate the public about the benefits of Bitcoin and Bitcoin mining. I'm really excited because today we're going to share the results of our Bitcoin mining survey that we ran. And we went to all of the Bitcoin miners and we asked them if they could give us an estimate of their hash rate and of their energy consumption, and also of the percentage of energy that was sustainable. And we define sustainable energy as renewable energies plus nuclear energies and some carbon credits. The credits were less than 5%, probably much less than 5% of the number. So for the most part, we were getting a sustainable number, which is wind and solar and hydro and nuclear and geothermal, the basic renewables. And we tabulated all that information on an anonymous basis, and we took the aggregate. Then we surveyed a wide global variety of energy analysts across the Bitcoin industry, Bitcoin analysts all around the world. And we also consulted with all of the experts and analysts within the Bitcoin Mining Council. And we engaged in some pretty serious number crunching. And I'm happy to share the results of that with you today. And let me start with the summary. What we found is that Bitcoin mining uses a negligible amount of energy compared to major countries and major industries, and we'll show that in a second. It's rapidly becoming more efficient. We're very delighted to see it's getting more efficient, and it's powered by a higher mix of sustainable energy than any major country or industry. And so that's the headline, getting more efficient and very sustainable. And I'm going to show you some of the statistics and the numbers we derived in this presentation today. So I've got 5 slides, and we'll start with the first one, global Bitcoin mining energy use. Bitcoin mining energy use is negligible. Now, sometimes people declare Bitcoin mining to be large compared to some certain place, but they compare Bitcoin mining energy use to negligible size other energy uses. If we actually compare Bitcoin mining energy use to major countries, and you can see here the United States and China and the EU and India and Russia and the world, you can see that the Bitcoin mining energy use is literally so small as you can't see the line or the bar on the screen. We had to manually enhance the size of the bar so that you could see it. Otherwise, you literally would not see the bar. The rest of the bars are to scale, and Bitcoin mining is approximately 189 terawatt hours if we gross up the electricity to a full energy basis. Generally, when you convert energy into electricity, you have a 65% power loss. So some of you may have seen a smaller number in terawatt hours. That would be electricity basis, and this is an energy basis. When we take the 189 terawatt hours of energy used by the worldwide Bitcoin mining network, and we compare it to the world, we get about 0.117, or in other words, 12 100ths of 1% of the result. So 12 basis points of the world's energy is Bitcoin mining. Definition of negligible, 0.1%. And so we see it here. The most important thing to keep in mind is Bitcoin mining might be comparable to the 178th largest country in the world, but you really have to go to an extremely negligible user of energy to find anything comparable. Now, what's also interesting is the type of energy that Bitcoin mining is using. Bitcoin miners are migrating to the edge of the grid. They're searching for sustainable energy. They're searching for renewable energy because renewable energy tends to be cheap energy. And so we've always had this theory that Bitcoin mining is a very good customer of renewable energy. And we all know that Bitcoin miners use marginal energy, stranded energy, and waste energy because otherwise they just couldn't get energy cheap enough to be profitable. But our survey actually gave us some hard numbers. The BMC member data, like the 23 Bitcoin miners that collectively represent 32% of the network, they actually turn out to be running on 67.6% sustainable energy. So that was a surprising number. I mean, we thought maybe 50% and then a lot more than 50%, but 67, almost 68% sustainable energy mix for the broad cross-section of Bitcoin Mining Council members. We then went and looked at the rest of the world and we talked to analysts. We looked at all the best public data sources and what we found was, of course, and we assumed a bit conservatively that the rest of the world would not be as sustainable as our sample. We kind of assumed that the Bitcoin mining council members might have a slight selection bias, maybe, but we don't know. The most optimistic estimates would be that the rest of the world is comparable to our sample set, but we took a more conservative view. And we also drew from other industry analysts around the world. And we estimate, based upon all the numbers we can find, that the global BTC mining industry is 56% sustainable. So, of course, the rest of the world is much less than 56%. Well, you can do the math. It's down in the less than 50% range. But the blend of the two gets us to 56%. And if we compare that to all the rest of the countries in the world, we can see EU is 49% sustainable energy, Germany 48%, the United States is about 30%, South Korea 30%, and then so on and so forth. So the takeaway from this is the Bitcoin mining industry has the highest sustainable energy mix of any major country. And of course, if we look at all the major industries, it's pretty obvious by inspection that Bitcoin mining is much more sustainable than shipping, trains, gasoline-powered automobiles, all of the natural gas powered industries, most of the heavy chemical industries. And for those businesses that run primarily on electricity, they tend to be sustainable at the electric power grid level. And so Bitcoin mining is in actuality the most sustainable energy mix we could find. We compared Bitcoin mining to the total worldwide energy usage, and this is another way to look at it. 189 terawatt hours versus 162,000 terawatt hours for the entire world. And again, on a rough estimate, you're talking about 0.1%. What that means is the global Bitcoin mining consumes about 40 basis points or 0.4% of the wasted energy in the world. If we compare Bitcoin mining to US electricity generation, you see that in fact, there's about 10,000 terawatt hours of energy used to generate electricity in the US. 6,800 terawatt hours is wasted or lost in the process, so about 65%. global Bitcoin mining is about 2.8% of the wasted energy in the US. And of course, it's a small fraction of the overall. Here's a fascinating slide. This shows quarterly results, Q1 versus Q2. And what we found is that moving from Q1 to Q2, network efficiency leaped. It increased by 15%. We went from approximately 12.6 petahash per megawatt to 14.4 petahash per megawatt. The BMC member sample are actually running on even newer, more energy efficient equipment, and they're more around 21.5 petahash per megawatt. So the significance of that green bar is not only do you see where the network is today, you see where the network is going. And clearly, as the network rolls over third generation equipment to second and second generation equipment to first generation equipment, we're moving to dramatically more energy efficient mining. The S9 generation is probably 5 times as much energy intensity as the S19 generation of hardware. And so you can see this is a very interesting dynamic. The second thing you see on this chart in the upper left corner is the overall consumption of energy in Bitcoin. And this is not a surprise. It dramatically decreased Q1 to Q2. In fact, we estimate this is an annualized, I mean, it's actually megawatts, but you could think of it as the megawatts of power that you would use if the hash rate and if the energy and the network stayed constant for the entire 12 months based upon where we were. And you can see that energy consumption fell 52% Q1 to Q2. This is because of the Chinese exodus for the most part. We can see on the right corner, the hash rate fell dramatically. The average hash rate of the network in the last week of Q1 was around 165 exahash. And the average hash rate in the last week of Q2 is around 89 exahash. So a 45% decrease in exahash, a greater decrease in electricity because we had less efficient equipment generating some of that hash rate. And the lower right corner is very fascinating. In Q1, our best estimates are that the Bitcoin mining network was running at a sustainable electricity mix of about 37%. And in Q2, we improved by 52%, a dramatic improvement to 56% sustainable energy mix on a worldwide basis. And you can see what's possible here by that green bar, because the BMC sample, which is not small, it's 32% of the network, is running at a 67.6% sustainability. So, I mean, this was quite a surprise to all of us, but a pleasant surprise. And the takeaway from this is the network is getting more efficient, and the efficiency comes from retiring older generation equipment, which was very power hungry, and rolling out the newer generation equipment, which is much more efficient. And it's getting more efficient because of the migration and the exodus from China to North America and the rest of the world. It's also getting more efficient just because we're running less hash rate. We're securing the entire network, and we're doing it with 89 exahash instead of 164 exahash. I think we all believe that the network's just as secure as it was, but we're using less raw energy to do it. And when we do bring on the additional hash power, we'll probably bring on better engineered, later generation, more efficient Bitcoin mining rigs. And so you're going to see that we're going to keep a lot of that efficiency, and we'll continue to get efficiencies. So efficiency really improved, sustainability dramatically improved, and all of this is based upon a set of different data sources. We've collected all the data sources and posted them here along with the links for all of you. you can see our definition of sustainable electricity and the source of it, and the questions we asked and the data we gathered. So with that, I want to thank everybody for being here and spending the time with us today. And we've got an action-packed program. I've got Peter Wall, who's going to take it from here. He's going to discuss these findings, his take on them as a Bitcoin miner. And then we're going to host a variety of analysts and other leaders in the space who are going to ask questions. We'll answer them as best we can. So with that, Peter, I pass the floor to you.
Thanks, Michael. Thanks for the presentation, and thanks for all your work on this. As well, Taras, who has been working with you and has been instrumental in gathering the data and building the findings. So thanks to the both of you for all the hard work. It's really significant. Before we talk a little bit more about sustainable energy and its connection to Bitcoin, I first want to just mention that it's also significant how quickly this came together, and it shows that this decentralized, informal group of Bitcoin miners from all over the world can get together and do the three things which we set out to do with the Bitcoin Mining Council, and that is educate the public about the benefits of Bitcoin and Bitcoin mining. That is share best practices and make sure that those best practices are widely known amongst Bitcoin miners. And lastly, be transparent. And this is an incredible level of transparency that the industry as a whole is putting out. The fact that we have essentially a third of the industry that has collaborated on this and brought together their energy, and that's just going to grow because it's been such a short time. It's been really 4 or 5 weeks only since the Bitcoin Mining Council's formation. So that's I think it shows that we can be decentralized, but it doesn't mean we have to be disorganized. So in the words of Michael Saylor. All right, so I just wanted to talk very briefly because I'm sure folks are going to have questions, and Jaime Leverton is also going to join us and kind of help guide some of the questions with the various folks who are waiting to ask them. But I just want to talk very briefly about why we think, or at least why our company Argo thinks that Bitcoin mining is driving sustainable energy, and the connection between Bitcoin mining and sustainable energy, because it's an important connection. And from what we see out there, there's essentially three things that are driving it. The first is, well, let me name the three things out, and then I'll just talk briefly about them. The first is portability. The second is flexibility, and the last is affordability. So on the portability piece, Bitcoin miners can go to where the power is, as Michael says, at the edge of the grid. So we saw this, in the early days, Iceland, Scandinavia, Quebec, where there was cheap renewable power that folks could tap into. Miners went there, and now we've seen other places come in. Texas. We've been talking about geothermal in El Salvador. There's an opportunity, unlike, it's kind of unique to this industry, where miners can actually take their operations with relative ease. There are obviously some challenges setting up facilities, in timing and that type of thing, but compared to other industries, relatively easily move to locations and set up. So portability is one of the reasons why sustainable power and Bitcoin mining go together. The second is flexibility. The fact that most of the power systems in the world are built to be for peak demand. So they're built so when there's the hottest day of the year in southern climates and the coldest day of the year in northern climates, there's enough power. So you have air conditioning to keep your house cold, and you've got heat in the winter to heat your home. But the rest of the time, there's lots of capacity that's out there that's not being used, that's not being tapped into. And Bitcoin miners provide this kind of load balancing function where 95, 98, 99% of the time they're using the power that isn't needed, except in times of peak load. And so there's kind of this demand response system, and we've seen this in Texas. We have a facility in northern Quebec where we do this, where there's curtailments, and when it's on a very cold day, the community can tap in and use that power that we would otherwise use, and some of our machines come offline. And we're okay with that in exchange for low cost of power. So that's another really important piece of incentivizing communities to build enough power for when they need it, but then helping them be more efficient and more profitable with their power systems in times of, on a local level. And we're seeing that, across the world happening. And those systems are becoming more and more integrated and more sophisticated. And then the last piece is affordability, and it's a key piece. If renewable power costs 3 or 4 times as much or twice as much, you go back 5 or 10 years, it was expensive. Renewable power was more expensive. That's no longer the case. What we're seeing is renewable power prices have come down, and they're competitive, or they're better than traditional fossil fuel sources like coal, et cetera, et cetera. So that's another key piece on the connection between sustainable power and Bitcoin mining. So I'm going to leave it there. I'm going to hand it over to Jamie. She's going to introduce us to some folks. But thanks again for attending, and thanks again for the team who put all the slides and the effort together.
Thanks so much, Peter. This is the data that we've gone through is absolutely incredible. It's really exciting to see this come together, as Peter said, in such a short period of time. And we do have a number of people that have questions. So I think we're going to start with Nick Carter. Caitlin, can we bring Nick in? Hello, Nick.
Hi there. Sorry, there's a little bit of background noise here. Sorry to pollute your call with that. Just a quick question from me. On the total assessment of the carbon outlay question in terms of the evaluation of the out of sample data, how did you devise that? What kind of methodology are you using to find that estimate?
Can you just state that one more time, Nick? Nick, you're on mute. Sorry.
Yeah, sorry about that. A little bit noisy here. In terms of ascertaining the carbon emissions factor, this global analysis you're doing for the 60% that is outside of your sample, can you provide more detail around how you devise that estimate?
Yeah, we took an estimate of off-grid and what we thought was likely to be non-sustainable power, and then we allocated another portion that we applied our BMC sample to in order to get a blend, and the blend ended up being slightly more than the electricity grid, but of course a lot less than the BMC sample itself.
Okay, just quick follow-up from me. What assumptions are you using in terms of the energy mix of that sort of out of sample miners that we don't really have clarity on?
What I don't quite understand the question. What
was the energy mix that you selected for the out of sample miners, that kind of 60% that's not in the sample?
Ross could be able to answer this.
Yeah, I think the way you can back into it is if you take the 56% and then you look at the 67% or 68% that we don't have, that's the out of sample, and then that number is like 50% or so. So it's something like 50% sustainable. So generally, it works out that the out of sample mix is assumed to be about 50% sustainable power, and we tested that with a variety of analysts, and the lowest estimate, the most pessimistic estimate we could come up with would be about 40%, because that's the worldwide sustainable electricity grid number. but we had a lot of analysts that we talked to suggested to us that they thought that the number was definitely going to be higher than 40%. So the highest we could have come up with is 68. We ended up with 50 or about 50. I don't have the exact math. Taras, do you know the exact math of what the sustainable mix would be for the out of sample?
Yeah, great question, Michael. Actually, the out of sample data average is approximately 51% to 53% Q1 to Q2. And that represents approximately, I'm looking at the data now, around 140 exahash in Q1 and approximately 60 exahash in Q2. And actually, it backs in nicely to what Cambridge actually posts as their official electricity data. And it's tracking quite well today and over the past few days as well. So that gave us quite a bit of reassurance as to our assumptions and our modeling and the actual power consumption that we backed into using the assumptions that Michael explained just now.
Shall we continue?
If Nick doesn't have any follow-ups, I think we're going to invite Friar Haas to come up next. Caitlin, can you bring in Friar?
I don't know that that individual has joined us.
He also goes by the name sometimes. What's his other name? Haas McCook. Haas McCook might be there.
No, I don't see.
I don't
okay.
see that individual
All right.
either.
So
Cool. Okay, we'll move on to the next section. So just so you folks know, in terms of questions, we've got Nick Carter, who's kind of a big legendary Bitcoin analyst, asked the first one. Friar Haas, another legendary Aussie. We're okay with that, but Aussie Bitcoin analyst legend. And now we're going to talk to some bank analysts. So there's a couple bank analysts who are online. These folks write about publicly traded companies. They know the space really well. In many cases, they've been studying it for years. And so we're going to talk to a couple of them. Then we'll take some journalist questions. And then I think we have Dan as well, an investor on the line. So why don't we go now to Kevin from HC Wainwright. Kevin's been covering this space for a long time, and I'm sure he's got some thoughts. And many of us have talked to Kevin about our companies and about the kind of the space at large. Kevin, are you there?
Yeah, Kevin's on mute.
You are muted, sir.
No, so apologies. I hadn't realized that I'd be invited to query. I'm flattered.
We love you, Kevin.
I don't know how universally shared that amorous feeling is, Jamie, but you know how much I appreciate it. I've suffered a long Bitcoin winter, so it's wonderful to have all this excitement. I'm wondering, I think really just off the cuff, if you'll make your slides publicly available. Great work there. I don't think the investment community is really aware of what you've done. And I've got to do everything I can to change that.
Yeah, Kevin, if you check out my tweet that I tweeted around 4:30, I think it takes you to a page where you've got both the press release on the left side, and then these slides are posted on the right side. And you can grab them and feel free to use them how you wish. It's also got, that presentation's got all the links and much more detail on the data attribution. So that will probably be useful for people as well.
Wonderful, Michael. Thank you. And thank you for inviting me. I appreciate it.
Great.
I think the biggest thanks really goes to you and your team, Michael, and everyone on BMC and trying to promote awareness here. I really appreciate that.
Awesome. Okay.
Thanks so much, Kevin.
All right, we've got another bank analyst on the line, Michael Del Grosso from Compass Point. Michael, do you have any questions for about the for any of us or about the findings?
I just promoted him. Just give it a second. Yeah. Hold on one second. Attendees. Michael, can you hear us?
Yes, can you hear me? Good evening.
Okay, go ahead.
So I guess question on some more recent topics. And by the way, this is a very helpful presentation. Hopefully this can continue on a quarterly basis because I think that the transparency around energy usage is welcome from the institutional investment community. But question on some of the more recent, Chinese, minor disruption and displacement, if you will. I think, Michael, you mentioned that the new hash kind of coming on will be more efficient than what it was previously. My estimates suggest something like, 1.1 million rigs, assuming, 90 exahash was, have been taken offline. Is your view that that's now obsolete, or how are you thinking about the redeployment of those rigs?
Well, I give a quick answer, and I'm going to pass the floor to the expert here, or experts. My quick answer is there was third generation equipment, or 3 generations ago equipment that was sitting in China that would be turned on and turned off. And you can imagine when Bitcoin got to $60,000 a coin, they were turning on some of that old equipment. But when the price comes down, they start to retire it. A lot of that stuff won't make the exodus. They're not gonna relocate that because it's just too risky and it's too antiquated. So the exodus is going to be the new equipment, the most efficient equipment, because it's expensive to move it. And the second point is it takes a while for them to install it. And so if there is a big delay in installing it, then stuff that made sense 6 months ago or a year ago may be obsolete by the time they move it. And so the exodus itself is I guess, causing a percentage, 20–30% of the least efficient equipment to be left behind. It's not going to make the journey. Now, Darin has given me long speeches and lectures on how difficult and challenging it is to actually solve the heat engineering of Bitcoin. So Darin, why don't you talk about the journey, or how long it takes to install these rigs and do the heat engineering, and give us your estimate of how long it will take to configure the equipment and your opinions about what equipment's going to take, make the exodus, and then when it will come online.
Yeah, thank you, Michael. Mike Del Grosso, thanks. Good question. And I think we're all looking to see how many pieces of equipment or rigs travel out of China over the next 6 months, 12 months. And really the bottleneck that exists in this industry doesn't revolve around mining rigs. I don't believe it ever has. Anybody could have put in an order for a mining rig and got it 12, 18, even 24 months out. So ordering machines is the least difficult part. Finding energy in a sustainable and renewable environment that has inexpensive power costs associated with it are really going to be one of the major driving factors of it. And then what we're seeing right now is a lack of infrastructure worldwide. And so you'll see a lot of the machines travel to areas that have infrastructure built out in excess, which is a very rare commodity. So the real bottleneck here is going to be infrastructure. And you're going to see the infrastructure right now, it's looking to be built in the most sustainable and renewable environments. On the 1,000,001 rigs that you guys estimate, Mike, are going to move outside of China, you have what, 90 exahashes as your figure on that. What would so the average rig is going to run it that you guys have, if you divide it out, I guess the median, you show most of the equipment around what terawatt, what terahash?
About 80 is what I'm assuming with that assumption. I don't.
Yeah. So I would assume out of the 1,000,000+ rigs that are going to travel out of China, 100, like hundreds of thousands, maybe 200,000, 300,000 are going to be S19s, which would exceed the 80. And then you're looking at S17s and some of the older other rigs, and you're getting into the 50s to 70s. And then I'd say a vast majority of what's left in China today is going to be S9s, which are 13 to 15 terawatts, and Canaan, old Canaan, and some of these silicon machines that are still running out there that are super inefficient. And to move them into climates that have spent significant amount of infrastructure resources on infrastructure, you're not going to see those leave till the end. And so if they do, if there's any point in time which makes sense to have them move out, but that's, I would say it's a lot less than people think, and it's going to take a lot longer to plug them in than any analysts are really anticipating, because building the infrastructure out, transformers, switchgear, copper wire, all the materials you need to build these facilities, they have long lead times, and especially right now in today's climate. You're looking at, you could have 12, 18, 24-month lead times for transformers. So we're really going to see this last. This exodus is going to last a long time.
I might just add, Mike, first of all, that was Darin Feinstein, the founder of BLOK and Core Scientific, not just the founder of one cryptocurrency mining company, but the founder of two. So I might just add to that as well. It's not just the hash rate that's come offline, it's the hash rate that was going to come online as well in the next 3, 6, 9 months. A lot of those miners have machines on order, and that's, estimated another 68 to 80 exahash. So there is definitely, like Darin said, the game right now is power. It's not rigs. There's lots of machines around. And so that's gonna be the challenge is finding power, cheap, renewable, reliable power.
And just if I can put one more thing, it's the older rigs that get damaged when you actually move them. So that's something you have to factor into your assumptions when you're putting 1 million rigs moving out of China for the exodus. A big chunk of the older rigs will not even make a move, so it's not even worth it. Michael, over to you.
I was going to ask Jamie if you had any comments on the subject.
No, I echo Darin's. I mean, it's all about the power and ultimately the infrastructure, and that I really think everyone's underestimating how long that's going to take with the supply constraints that we see in the industry.
Yeah, and Mike, I would just say that I talked to a lot of Bitcoin miners before the China exodus became manifestly clear. And as you recall, if you roll the clock back to before this we started noticing this in the middle of May. If you roll the clock back to before the middle of May, Bitcoin was in a massive bull market. Everyone was as aggressive as they could, and there was not any excess capacity to be found anywhere in the country. So all of the facilities that could host these rigs were already maxed out, and Bitcoin miners that I talked to were scrambling to locate power and then to figure out who could engineer the mining center. And it's not like someone was sitting with 30% extra capacity hoping someone would put a mining rig there. So what's happened here is there will be an exodus. It has taken a lot of hash power offline. A lot of the older mining equipment it was sunk cost, and if you could leave it sitting in an existing mining center, it would have made sense to run it in China with existing power relationships. But if you have to pick up and establish new power relationships, new political relationships, you have to engineer a new mining center. Common sense says you don't move the inefficient older equipment. You come with the brand new equipment, and everybody has got a jockey for a fixed amount of capacity. And the other impression I get, and Darin, correct me if I'm wrong, Bitcoin mining engineering of data centers is different than engineering data centers for Google and AWS. It's a very specific skill. And so it's not like the world's full of tons of engineers and engineering companies that know how to do that well.
Yes, correct. The math doesn't exist right now when you move into these facilities that are close to stranded power, renewable power, mostly in North America areas. Specifically, and we found a lot of this up in the Appalachian Mountains, where the United States government built critical infrastructure in the 1940s. They built a series of hydroelectric dams for the Manhattan Project. And what you saw was a lot of manufacturing facilities straddle that line of hydroelectric dams because they were surrounded by really inexpensive renewable sources of energy. And then converting those buildings into mining facilities is a math skill set that doesn't exist. You can't take an engineer that left Google or one of the other big box players and have them come in and make and put together your facility thermodynamically. The math that they learn, they have to forget it all and then relearn how to do it with these specific machines and their thermodynamic footprint.
All right, Mike, do you have any other questions?
Yeah, that's very helpful color. I guess the follow-up and what I'm trying to get at is obviously there's a considerable amount of kind of redeployment of that hardware. But when we think about that redeployment, particularly as it relates to this presentation today around energy usage, is it this council's contention that those rigs are going to be deployed to sustainable and renewable sources? Or do you think that it's going to be kind of a lowest common denominator and that a lot of the existing infrastructure is coming from carbon-based sources and we could see, that type of deployment going forward?
I think we're going
to take it, Darin?
Yeah, I think we're going to see the most efficient machines move first, and they're going to be deployed into infrastructure facilities that have been built to codes that their investment communities are going to be happy with. And so you're going to see the most sophisticated infrastructure on an enterprise grade level built right now in North America. So you're going to see if someone's going to buy, for instance, 5 or 10,000 units, we're talking about $50 million, $100 million capital outlay. And they're going to want to make sure that capital outlay goes to the most enterprise grade level facilities. And those are going to, by and large, are going to be built by most of the people that have responded to this council and have a renewable energy metrics in mind. You'll see a lot of the older machines travel all over the globe. And, we have no idea of, how fast facilities will be built up. Certainly some of the facilities that are going to be dismantled in China will throw off some infrastructure for some other people that might want to use it. We couldn't use those. The infrastructure out there is not up to code that we could utilize in our region.
I might just follow up, Darin, with a couple thoughts as well. In terms, Mike, of essentially what you're asking is do the Chinese, are the machines that are coming out of China, are they going to be going to sustainable power, to renewable power? And I think, as Darin said, they're going to be going to, a mix of places depending on, what's available. But I think the idea, certainly, from everything I've heard, Chinese miners also are aware of ESG concerns. They're also aware of, the conversations around energy usage in this space. And to think that they are just going to go for the cheapest, whatever at any cost, I don't think that's the case. I think they are sophisticated business people, and they understand that this is, there's ESG concerns from investors and from all sorts of folks, and so they're looking for, sustainable renewable power as well, at least from everything that I've heard and conversations I've had, and so I'll say that, and when you look at where that power is coming from, it was coming from 70% plus coal for at least during certain times of the year. I mean, obviously there was this kind of seasonal, shift that happens in China between the dry season and the wet season, and that's been well documented. And so during the winter, there was more coal that was being used. That won't be done anymore. So just the fact that that's a lot of that's coming offline will improve sustainability moving forward.
Yeah,
understood. Thank you.
I would just add, sorry, go ahead, Darin.
No, I was just saying, good job, Peter.
Okay, Jamie, go ahead.
Yeah, I was just going to add that painful for all parties involved, and they're going to look for energy sources and location long term. So I think that will be a driving force. And if coal is being shut down increasingly in geographies, they're not going to go to coal as a source because it risks being shut down and them having to move again. So I really think that all of the driving forces point to more renewable sources ultimately being where they land.
Yeah. Okay, let's move. Mike, do you have any more questions, or are you okay if we move on to the next attendee?
No, thank you for taking my questions. Thank you.
Okay, thanks, Mike. All right, next we've got Lucas Pipes, who is very stealth. He's logged in under a different name, Matthew Key. He's logged in, so you're going to see maybe Matthew Key come up on screen, but it's actually Lucas Pipes. Lucas is with B. Riley. He's an analyst who's covered in the space for a while. B. Riley's been very active in the space as an investment bank. Lucas, do you have any questions? Lucas, if you are speaking, we cannot hear you.
Hey, this is Lucas. Can you guys hear me?
Yeah.
Terrific. This was the fastest time I've logged in and out in my life by accident. But no, thank you so much for this really informative presentation. This was really terrific. Great job, and yeah, really helpful to see these metrics. My first question is on one of the slides, you show the improvement in network efficiency. And I wondered first, do you have a model, or do you model continued improvements in the network efficiency? And is there an upper limit where this can go, or would you say the kind of sky's the limit, and we should see year after year, quarter after quarter, continued improvements in that network efficiency? Thank you very much.
Taras, do you want to start by describing some of the efficiency factors?
Yeah, absolutely. Thanks, Michael. Great question, Lucas. I really appreciate you joining us and the questions. The efficiency factor you saw was really petahash over megawatt. And really what that is obviously the amount of performance we're getting from the input of energy going into the system itself, right? There was a recent report done by EIA that actually does a very good analysis onto Bitcoin mining efficiencies. And we're actually working on an internal model that we will be publishing over the next few months that plots out, based on historical precedent, how miner efficiencies have actually increased over time on a terahash per watt basis, but also the decrease on a joule per terahash basis, which is how most miners are measured on efficiency when you're looking at power consumption. And really, you look at Moore's law as to how fast can computers go, and people 10 years ago would say, oh, there has to be a cap. But what we've been seeing is through material sciences, that Moore's law is actually holding quite well. And I mean, as the value of transactions and the value of the network continues to increase, I'm sure the necessity for engineers and scientists and physicists will be there to come up with new technology to ensure that performance and efficiency continues to scale as we've seen over the last 10 years. Right now, the limitation really is on high quality silicone. We're moving from 5 nanometer to 2 or 3 nanometer over the next 5 years. So we certainly will have some thoughts to that, but that's really where we've been coming from on an efficiency basis for the network itself. We will be sharing that data with you, and happy to take this offline to get into any more granular detail for this question.
Super helpful. Really appreciate it. And more questions, but I'll leave it here, and really look forward to the continued updates from the council. Terrific work.
Thanks, Lucas. All right, next question is Mike McGlone from Bloomberg. Mike's covered the space for a long time, and is sometimes quoted by other people talking about the space, which you've been in the game for a while when that's the case. So, Mike, are you there? I think the live thing sometimes takes a little while for things. There he is.
Yeah, we see you. You're on mute now,
Mike, are you still there? Can you, it looks like you're on mute.
This is Lucas. I had this issue, and you had to identify a few. I had to identify a few images to be allowed back into the room. So it just took a moment.
Okay. All right. There's a skill testing question, essentially. To be able to ask a question, you have to answer a few questions, a skill testing quiz. While we're waiting for Mike to come on, is there anything else that any of the current folks up want to say, just to add to what we've already talked about? Obviously, China's front of mind right now. ESG's front of mind. It's such an interesting time in the space.
I think it's interesting, and I think it's important to point out that the slides that Saylor went through the presentation on, and we keep referencing, to note where we're holding them online, and they're available for everybody. Saylor, where are they?
Yeah, well, if you go to my Twitter, follow me on Twitter, look at my tweet and click on it, and it'll take you to the landing page, which has all the slides that are available.
And we want you to use them. So take them, use them whenever you want. We have, we want no source or site credit. Use them any place you want. They're there for the education of the people in the industry. There's 7.5 billion people on the planet that have no idea what we're talking about. And so if we can help them understand that this is a way for them to access freedom and private property rights along with censorship resistant money, then that's really the goal of what this council is here for, or the education of the people that are not here on YouTube with us. And as we set forth into the world with this technology, we really are, it's important to educate everybody else.
So Mike, I see you're a panelist now. You're on mute.
You're still muted.
But we see you. We don't hear you, but
Maybe we should line up the next, let's invite the next person as well. Wolfie from the BLOK. Looks like, Michael, you froze there for a minute. Wolfie from the BLOK as well, if you want to start the process of coming into the room to ask a question. Wolfie's another guy who's covered the space for a long time, particularly has very good connections in China, and has been, if you've seen his Twitter feed, if you're not following him on Twitter, you should be. He's been tweeting out, kind of the inside scoop of developments coming out of China over the last few months. And it always seems to be kind of first breaking news.
You can pull McGlone off. He's not going to make it.
So it doesn't look like Wolfie has joined us, and I'm trying to promote Dan next as well.
Okay.
All right, and you can take Mike out.
For technology industry, we seem to sometimes have some challenges with
Zoom
technology.
things. We could figure out Bitcoin, but Zoom is a different.
Yeah, exactly. There's Dan. All right. So Dan Weiskopf, let me just give a quick intro. Sorry, Michael, for Dan. Dan is the portfolio manager for the Amplify ETF called BLOK. Also knows the space really well. He's talked to many of us in depth, asked great questions, is a significant shareholder for a lot of the publicly traded mining companies and beyond. MicroStrategy, I think, is in the BLOK portfolio as well. And he always has thoughtful things to say. Michael, did you want to add anything?
Dan, can you hear us?
Almost.
I don't know. I can hear you now.
Yeah. There you go. All right.
Okay, good. So, I guess if I had one question, it would be a little bit more about what other industries might be doing to do what you guys have done, and how we can kind of put forward that step. We're investors in publicly traded companies, but maybe other industries should be forming these kinds of councils and addressing these kinds of issues. I just present that as a question. Maybe I'm being idealistic, but I commend you for your efforts. And if anybody has any ideas about that, whether it's banking or retail or manufacturing, it probably would be a good thing to be encouraged.
Well,
We know
yeah,
that the
sorry.
the World Gold Council is a very active council as well, Dan.
Yeah,
Yes, but I don't know that they're the greatest example of on how to deal with this issue.
I think the automotive
We're
industry
the
has,
greatest example.
I think the automotive industry pledged to be carbon neutral by 2050. So I think we're going to beat them.
I think the important thought here, though, is that first of all, Bitcoin is a very complicated industry. I mean, it's a very competitive, complicated industry between the holders, the technology companies, their applications on Bitcoin. There's hardware device on Bitcoin. There are exchanges on Bitcoin. There are companies doing derivatives of Bitcoin, the banks of Bitcoin. So it's a very complicated industry because there are so many different ways to add value. And it's also complicated because it's a global industry. So it's simultaneously functioning in Singapore. How many American restaurants or automobile companies would be affected by a policy in China, right? Like it's functioning in China and Europe and South America and El Salvador and America all simultaneously. So you've got 100 regulatory jurisdictions, you've got political systems, you've got every major industry, the software, the banking, the hardware, the finance, the energy industry. And then the third big interesting idea here is it's a complete, utter paradigm shift. Like the idea that you're digitally transforming property, the digital transformation of money or the digital transformation of property is such a mind-blowing idea that all the investors in the world, they're very comfortable analyzing digital transformation of books and records, and digital transformation of cameras. But when you actually talk about digital transformation of property or money, that's so mind-blowing that what you've got is just a big education gap. And so I would make the observation that something like the BMC is more important to Bitcoin than, you don't necessarily need an industry association to explain to people, amusement parks in the US or consumer goods, because they grew up understanding those things and they tend to be local phenomena. But Bitcoin is a geopolitical global phenomena, and it's a technical phenomena, and it's an extremely rich industry. So if there's ever a place where you can add value through education, I think this is the place. And if there's ever a time, if I walk down the street and I said to 100 people, do you understand what digital property is and how it compares to physical property? I would think that 98 of them would look at you with a blank stare and say, what are you talking about? So I feel like we need to do this more than other industries need to do this. Apple probably doesn't, and Samsung, they probably don't need industry associations to convince you to buy the next iPhone or to explain to you the ramifications of television. Or at least, having said all that, there is the Motion Picture Association, and there are lots of precedents of great industries that were made great because of some trade association. And I think the idea of Motion Picture Association was make it safe and family friendly and communicate, all the goodness that can come from it. I think the same is true with Bitcoin, right? Communicate that the big thing that people need to know is this is a technology industry. It's rotating from energy intensive to technology intensive. You go back 3 generations and you needed 100 times as much energy to hash something out, and you go forward 3 generations and maybe you'll need 1/25th of the amount of energy you're using now. So understanding that it's technology and not just manufacturing or energy is important. And then understanding that it's a digital transformation of something that in 100 years no one ever digitally transformed is important. And that opens up all sorts of questions from the media and from institutions and academics and politicians. And if you had all those questions, the Motion Picture Association had a lot of complicated communication in the US. Imagine communicating in 100 different cultures to 100 different political systems, where in fact, imagine if they had different rules for movies, state by state, city by city, country by country, and then what it would be like. Because in Bitcoin, you do have different rules state by state, and you do have different rules country by country, and 98% of the people don't even understand what the product is. You're digitally transforming a balance sheet or a property. So I feel like we have to do this. We need to do this. It's for the good of the industry. If someone invents other radically new, revolutionary, disruptive industries in the future that people can't wrap their hands around, I'm sure they'll need some sort of trade associations as well to communicate those things so that people get comfortable with it.
Thanks.
And I'll just add one piece to that, Dan, which is sort of the challenge and the opportunity here is to be a decentralized group in a decentralized industry, and to really commit to the core principles of Bitcoin, and respect those, and make sure that we are open and voluntary group. And so that's that's one of the opportunities for the council, is to have this kind of, we're all kind of competitors at the same, well, we all are, publicly, many of us are publicly traded, some of us are not in the council. It's really open to everyone, and that's important that we get that openness right. And so, Michael's been obviously a huge part of driving membership towards the council, and as we grow, that kind of openness and size is only going to increase. And again, the fact that we had in a very short time frame, we had a third of the network basically join the council and participate in the survey is remarkable. It really is remarkable. And at the same time, we all are doing our own thing. We're all independent. We're all, figuring out our own ways to build, our infrastructure and support the network. So it is a unique thing. It's a small, there's not that many Bitcoin miners in the world. I mean, it's still a very small community. So the more we can decentralize it, and the more we can be, organized at the same time as being decentralized, that's the better.
And Michael, and maybe group rather, maybe I missed this question or missed the answer to this. Are you planning to survey the people or the miners on a monthly, quarterly, or annual basis to see how that number changes?
Our plan is to try to be quarterly communicative. So we'd like to on a quarterly basis redo this survey and then communicate as transparently as we can the state of the Bitcoin industry as we understand it. So we think that's the right framework. Every month would be too fast for us, and then every year is probably too slow for an industry like this.
And my last comment, and I hope this comes out correct. I was surprised by somebody's comment last time about the emphasis that so many of the companies are publicly traded, as founding members of the council. For me, frankly, when you come public, especially when you're a CEO, you're more used to transparency, which again, I would say that's what this group is offering on a consistent basis, far more than what most people are used to as CEOs, as private companies. So again, frankly, not to kiss up, but I commend you guys for your efforts.
Yeah, thank you.
Great, thanks, Dan.
I think that one of the really important trends right now with the Chinese exodus is we're going to see the newest, most efficient equipment in the world flow out of China, and in the equipment that had been ordered that was going to China, that new equipment, which is very efficient and and very effective, that's going to flow to the West. And it's going to flow generally to North America because North American Bitcoin miners are the best capitalized Bitcoin miners in the world. And that's because they're for the most part, either publicly traded or they have access and plans to become public, or because they have access to North American capital, which is most supportive of Bitcoin mining. So what you have is this, I don't know, trilogy or trinity, three things coming together. You have really high quality equipment. You have very high quality capital. And then you have sustainable, high quality, clean energy. And because the Bitcoin Mining Council, its survey, right, it's kind of painting a picture for you, 68% sustainable energy, and it's getting more efficient and it's getting more sustainable, and they're getting deeper pockets and they're building bigger engineering centers. So if I'm operating in anywhere else in the world, if I'm operating in Asia or South America or China, I want to come to a very well-capitalized area to do business. And I think that the pecking order is like this. I think in large parts of Asia and China, they were operating a mixture of equipment on a mixture of energy, sometimes less sustainable energy, low efficiency equipment, without access to the capital markets, with capital controls. They're cash businesses, and they have to mine the Bitcoin and sell the Bitcoin, right? I mean, if you've ever been to China, they have a stock market, but it's not liquid. So you can't move capital out of the Chinese stock market anywhere else in the world. They've got capital controls. So you have one tier of miners that have been in the business for a while, but they were locked out of capital markets, and they didn't have the same kind of sustainable energy mix that we have in North America. You have a second tier, which is the European capital markets. You can come public, but they don't actually have the same degree of enthusiasm and the same amount of capital that we have in North American markets. And so the first tier is North American capital markets, North American energy sources, sustainable, renewable, especially you can see the energy mix of the Bitcoin Mining Council members. And of course, those well-capitalized companies aren't raising all that money so they can buy second, third, fourth generation equipment. They're actually raising the money buying the best equipment. So you can see the entire China exodus is catalytic, but what it's catalyzing is a migration of the best technical capital to be married with the best energy capital, which is clean, renewable, to be married with the greatest amount of financial capital, which is Wall Street. And we've got a big shift of the entire network. The network's getting cleaner, and the network's getting more Western and freer, and the network is getting more efficient. Another way to say it is Bitcoin, right? Bitcoin is moving west. It's a great thing for American technology and North American technology. It's a great thing for the Western capital markets. And what you'll see is that the dirtier, less efficient equipment is just going to be retired and will not be migrated. And this will be a self-fulfilling loop, right? Because capital markets are going to support this because it's now beneficial. And that's the story here, which is a fascinating one. If you can parse it out and figure out the timing, there's going to be a delay, 12, 18, 24 months, a lot of jockeying. And in chaos, there is opportunity, as Sun Tzu once said. Sun Tzu said it, Bruce Lee repeated it. I guess anybody on the panel have any final comments on the subject for the quarter before we wrap?
Anyone want to add anything?
Yeah, well,
go ahead, Michael. No, the only thing I'll say is this 56% number is very significant. It's higher than we thought it was going to be. it shows we're moving toward, the industry is moving towards, a more sustainable future. And it's going to be interesting to see what it is, next quarter and how it goes from here. So it's one, the fact that we've got the data, I think is a story, but two, I think the fact that is over 50%. Didn't someone say something about 50% sustainable sometime? I can't quite recall, but I seem to think that number was significant somehow. But yeah, in this case, the fact that we're moving in that direction, and that the members of the BMC who are even into the 60 percentile. So I think it's good news for the industry.
Yeah, and it really reinforces the fact that Bitcoin mining really does provide a backstop and a big support for the renewable development sector as well. I mean, the data that Mike, Darin, and I have been grinding over for the past few weeks really does reinforce that. And, it's just as much of a heads up for the renewable power developers that they should really be looking at Bitcoin miners to be really great partners for the future.
Yeah.
Yeah. Listen, and one really final point, and Saylor talked about it on the deck, is that anytime somebody brings up the massive amount of energy used by this system, it's completely false. It's intellectually dishonest information. And so we've given everybody a slide that answers it directly in framework that's simple to understand, is that the world generates over 160,000 terawatt hours of energy, and the Bitcoin mining network globally uses only 198 terawatt hours of the 160,000 plus created every year, which is less than 0.1% or around 0.1% of the total generated power on the planet Earth. So it's a negligible amount. And so this narrative that keeps reappearing in the media about the massive amount of energy used by this network is false and misleading. And that's really one of the purpose that drives so many people to send in their information to show the world that it's really a negligible use of power. If you shut the entire system off, you'd shut off 0.1% of all the energy generated in the world, and most of it comes from renewable sources anyway, so it's stranded. And so that's, you should, if you would like, and you can take it, like we mentioned, all of these slides will be available on the Bitcoin Mining Council website. They're also available on Michael Saylor's Twitter right now, and all types of other locations. And please feel free to take them and post them anywhere you want.
Yeah, and I'll just end with a thought that we know that Bitcoin is a revolutionary technology. We're in essence digitally transforming property. We're demonetizing 20th century property like gold and real estate and equity and bonds and currencies and anything like that that's used as a long-term store of value, and it's moving into a digital form on the world's dominant crypto asset network. So we know that. Here's the other thing we now know. If you are an ESG activist, Bitcoin is the most ESG friendly industry in the world. It's G friendly because it's got the best governance in the world. There is no board of directors. There is no CEO. No one can manipulate it. It's totally, utterly fair, honest, and truthful. It's S. It's good for the society because it's giving property rights to billions and billions of people. Aren't many other technologies that offer the promise of property rights and wealth preservation to everybody on Earth using a $50 Android phone. And if you're concerned about the environment, not only is this running, the BMC members running 68% sustainable energy, which is higher than the next 10 major industries I could find. I can't find an industry that's material that has more than 68%. I cannot find one, and I challenge anybody to find a major industry that's running at more than 68% sustainable or even 56% sustainable. So we know it's sustainable, but the other thing we know is that Bitcoin mines will migrate to the end of the earth. They can go to volcanoes, they can go to islands, they will go to the North Pole, they will go anywhere where there is renewable, sustainable energy, and Bitcoin is the best customer of sustainable energy in the world. When Bitcoin is trading at 35,000 a coin, you can monetize any intermittent, sustainable, or any intermittent renewable power source at 35 cents a kilowatt hour using the current generation of Bitcoin miners. There's no other industry in the world that can monetize intermittent power from a renewable source at 35 cents a kilowatt hour. And you can do it on the thinnest of pipes. You don't need Google high bandwidth, and you don't need triple redundant data centers. So if you're looking for a clean industry to monetize intermittent renewable energy anywhere on Earth, no matter whether there's a population center or not, no matter whether you got fiber optic lines or not, Bitcoin is that clean energy. It's the clean business. And so Bitcoin is the cleanest industry in the world. And once, every time people bring up this issue, I think that's our entree, just to share with them that Bitcoin is the solution to the problem of how we clean the environment. Bitcoin is the solution to the problem of how we deploy great corporate governance. And Bitcoin is the solution to the problem of how we improve the society, in addition to being really cool technology and maybe the most disruptive technology of the century. So
and being secure, which is one thing we didn't talk about, Michael, sorry to interrupt you, but the fact that proof of work actually is incredibly secure and has never been hacked and has survived, the last 12 years unscathed. That's why we're talking about this energy usage, because of it's connected to proof of work. Someone just made that comment on Twitter, and it's a good comment. And we didn't get into that today about the importance of proof of work and its connection to energy and how that relates to everything. But that's obviously a huge part of the conversation as well.
Yeah, so as you can see, we've got a lot of enthusiasm. We have a lot of exciting results. We don't have time to cover everything else we might like to cover today, but we do look forward to doing this at least on a quarterly basis and looking for other ways that we can use the Bitcoin Mining Council to educate the public. So I would encourage anybody to reach out to us with any ideas. We're very engaged, and we look forward to your thoughts and comments. And we'll look forward to doing this again in 3 months at the latest, when we'll bring you our next set of data. If you're a Bitcoin miner and you're not in the BMC, join us. We're better together.
Nice. And just the one last comment, there are 3 Canadians on this call. It is Canada Day today. So happy Canada Day to my fellow Canadians and any other Canadians out there. And happy 4th of July weekend to our American friends. It kind of feels like a good weekend to celebrate, given, well, in Canada it's a bit complicated, but in the US, happy 4th of July. It's holiday weekend. What can I say?